Let's just take a look at the indicators. All right, let's get the down low on the markets with Carmen Mpelwane. She's a portfolio manager at ABSA Asset Management. Thank you very much for joining us, Carmen. So, of course, markets last night in the United States were upbeat. Asian markets also upbeat, with the exception of the Japanese Nikkei share average. But here at home, we started in positive territory, but we seem to have veered into the red. So what's your analysis of today's events?
Yeah, thank you. It seems that the latest news that has come out of the talks in Turkey appear to be negative. And when I say negative, not to the upside, as much as Russia has given an indication that they are due to pull out of Kiev. It would be remiss of the world to think that Putin would pull out and concede defeat at this point. I think it's more a case of regrouping, and in those territories where they were able to gain a foothold, to add more firepower there. And this has led to the risk-off this morning in terms of global markets.
Now, oil prices did dip following the announcement by Russia that they were going to kind of de-escalate their invasion of Ukraine. But those, the oil prices since jumped up above $110 a barrel. What's this all about? I know OPEC is having a meeting today. Has that got something to do with that?
Okay, yeah. Look, volatility is definitely going to be a big theme until the war in Russia comes to an end, and who knows when that's going to be. Having said that, in terms of oil, OPEC's meeting, which is actually tomorrow, is going to be one where I think the market's going to be disappointed once again. The view has been, or the hope has been, that you would see an increase in the barrels per day to be released. But I think it's going to stay at the addition of 432,000 barrels per day from May. Having said that, we've seen in the last few months, as much as OPEC has increased their production, they've still yet to actually meet that target that or the guidance that they have set. So it seems that we're still falling very short, and that's giving significant support to the oil price.
Now, just coming to our local market, as I mentioned, we started in positive territory, but then sort of veered into the red. What are you seeing there? And are we so heavily correlated that at the end of the day, it's all about international markets rather than anything moving local markets?
Yeah, definitely. We saw yesterday that across the sectors, industrial specifically, as well as banks, that there was a large drive to the upside. However, that's all pulled back today. And as you've mentioned, I think that's largely driven by geopolitical risks, number one. So as much as the JSE is tracking largely sideways today, we've given a lot of yesterday's gains back both in industrials, including the retailers, as well as in the banks. And we're seeing the resources index jump by over 2% today. So as you've mentioned, it's more geopolitical risk that's had the impact on the JSE movement today.
So given all the volatility, as you've described it, I mean, where do you see equity investment opportunities in the South African market for people who are thinking about stashing some money away into equities?
Yeah, I think that's the billion-dollar question. I wish we all had an easy answer for that. Unfortunately, that's not the case. But I think the key thing, especially in times of volatility, is to keep a clear head. Look at the fundamentals of those companies who, through the war, and so in the medium to long term, will be able to continue growing, number one. And secondly, those stocks that have significant dividend yields. that would carry you through a time as we are seeing now. So a lot of interest in terms of looking at the insurance space, number one. A lot of over-provision has happened through the pandemic. And the view is that this may be a key investment opportunity. And then secondly, through the volatility, to look at sectors like the healthcare sector, which is immune to the geopolitical risks at present. And so earnings that we expect to come through are likely to be stable despite the volatility.
You talk about the health sector. What about the medical hospitals, you know, the likes of Mediclinic and your Life Hospital? Would those be worth having a stab at, especially as things normalize post-COVID?
Absolutely. We've seen in general, the emerging market hospital groups, and those specifically that you mentioned, South African hospital groups, have underperformed compared to the rest of the world, but also to the JSE. The market has been waiting for the dying down of the pandemic and to allow elective surgeries and medical cases to return to hospitals as per pre-COVID. So that's what we will be looking for in the next 2 months, and we're likely to get trading updates in the next month. And we're hoping that that would be positive to the upside as we see operating margins return to pre-COVID levels.
Carmen, thank you very much for your time and your contribution there. Carmen Mpelwane, she's a portfolio manager at ABSA Asset Management.